Good morning, dear friends. Welcome back to my class, Indian Banking. So far, we have discussed many aspects. Where did we start in the last class? As you know, development banks, right? Till SIDB, till NABARD. So we had discussed. Now, let's discuss another important development bank, Small Industries Development Bank of India, SIDB. Established in October 1989 and commenced its operation from April 1990 with its headquarters at Lucknow. It is the principal and exclusive financial institution for the promotion, financing and development of micro, small and medium enterprises and for the cooperation of the functions of the institutions engaged in similar activities. It is a central government undertaking. SIDBI, it has coordinating with the work of all of them and has evolved a strategy to analyze the problem faced by medium, small enterprises and come out with tailor-made solutions. It has covered around 600 medium and small business enterprises through a pan-India network of its 85 branches all over the country. 50 credit advisory centers and partnership with cluster level industry associations as on January 31st, 2013. A unique scheme of the credit guarantee for micro and small enterprises called CGTMSE has provided coverage to about 1 million with guarantee covers for an aggregate loan amount over 48,000 crores. What are the functions of SIDBI? It initiates steps for technology adaptation, technology exchange, and transfer and upgradation and modernization of existing units. As I told you, so this is the institution established in order to provide financial support and development of micro, small and medium enterprises. If there are any small, medium enterprises who wants to adopt technology in their business unit, so it gives the financial support for the modernization and technology upgradation of such business units. It participates in the equity type of loans on soft terms, term loan, working capital both in rupees and foreign currencies, venture capital support, and different forms of resource support to the banks which are already engaged in financing and development of small, medium enterprises in our country. SIDBI facilitates timely flow of credit facilities for both working capital requirement for MSMEs and term loan for MSMEs with the collaboration in the collaboration with commercial banks which are already financing such business enterprises. SIDBI enlarges marketing capabilities of the products produced by the MSMEs in both domestic and international market. Just it provides the marketing opportunities for those products which are produced by the MSME. Should be directly discounts and rediscounts of bills with a view to encourage bills culture and helping small scale industrial units to realize their sale proceeds of capital goods and equipments and components, etc. So this point tells that if small business organizations have international bills, foreign bills, those bills can be discounted with SIDBI and they can take the financial support, especially those industrial units which are engaged in exporting equipments and components and capital goods to other foreign countries. SIDBI promotes employment oriented industries, especially in semi urban areas, to create the employment opportunities so that semi urban areas, urban area migration, rural urban migration, the people can be checked and avoided, so that by establishing employment oriented industries in semi urban areas, so that the people from semi urban areas cannot able to migrate to urban areas because they will get the job opportunities there itself. So this is the way how SIDBI is extending the financial support and promotional support to all those MSMEs which are operating in the country. Another important development bank, NHB, National Housing Bank. It was set up in July 1988 as an apex financial institution for providing the finance to the housing sector. With a man-made to promote efficient, viable and sound housing finance companies. Its functions aims at to augment the flow of institutional credit for the housing sector and regulate National Housing Bank to regulate housing finance corporations. NHB mobilizes the resources and channelizes those resources to the various housing infrastructural development in the country through different schemes. It provides refinance for direct housing loans given by the commercial banks and non-banking financial institutions. So this point tells that if any commercial banks and NBFCs are already providing the financial support for the infrastructure development in the country, especially housing sector, NHB is giving the refinance for those institutions. At present, it is wholly owned subsidiary of the RBI. It is come under the RBI, which contributed the entire paid up capital. RBI has proposed to transfer its entire shareholding to Government of India to avoid conflict of ownership and regulatory role. So now NHB is completely owned by Government of India because RBI is regulatory authority. The outstanding portfolio of NHB at 33,083 crores as on 31st December 2012 in almost equally divided between the commercial banks and housing financial corporations in the country. Another development bank, Exim Bank, Export and Import Bank of India, set up in the year 1982 by an act of the Indian Parliament for the purpose of financing, facilitating and promoting the India's foreign trade. It is a principal are the main financial institutions in the country for coordinating the working of the institutions engaged in financing exports and import business of the country. Exim Bank, it is completely owned by the government of India, and the bank's authorized and paid up capital are 10,000 crores and 2,300 crores respectively. Exim Bank lays special emphasis on extension of lines of credit to overseas entities, national governments, and regional financial institutions and commercial banks. So, Exim Bank is not only providing the finance for exports and import in the country, but also it extends the line of credit to those entities or business houses which are already operating in other foreign countries. And if there are any regional financial institutions outside the country which are in need of finance and commercial banks, for them Exim Bank is providing the financial support. Exim Bank also extends buyer's credit and supplier's credit to finance and promote the country's exports, especially the export oriented units. The bank also provides the financial assistance to export oriented units, the units, industrial enterprises which are meant for only export business by way of term loan in Indian rupee and as well as foreign currencies, for setting up new production capacities, facilities, and expansion, modernization, and upgradation of existing facilities outside the country, and for acquisition of production equipments and technology. The bank has introduced a new lending program to finance research and development activities in the export oriented firms. So now let's understand the role of joint stock banks in India. The importance of a sound banking system, commercial banking for the development of the country may be understood as follows. Capital formation. The rate of savings is generally low, especially in a country like India, due to the existence of deep-rooted poverty among the Indian masses. So therefore, in order to encourage the potential savings among the masses, so this bank, to mobilize the dormant savings among the public, established the development of sound banking system is essential for the development of the economy. So therefore, joint stock bank, which is being engaged in mobilizing the savings, therefore capital formation is being made. Monetization. Developing economy is characterized by the existence of large no monetary sector, particularly in the backward and inaccessible areas in the country. The bank, by opening the branches in the rural and backward areas, can promote the process of monetization in the economy. It means with the help of money, without exchanging the goods for goods. Innovation. Joint stock banks has a number of innovations which are an essential prerequisites for the economic progress of every country. So these innovations are mostly financed by bank credit in the developing economies. The entrepreneurs of the country who are engaged in innovation, adequate bank credit is also being given. The bank should therefore pay special attention to the financing the business innovations by providing the adequate and cheap credit facilities to the entrepreneurs in the country to conduct the innovations. Finance for priority sector. The commercial banks in developing economies generally hesitate in extending the financial accommodation to such sectors like agriculture, small businesses, on account of risks involved in it. The most they mostly extend the credit facilities to the trade and commerce where the risk is less. But these financial institutions, but for the development of these countries, it is essential that the banks take a risk in extending the loan for those priority sectors, especially MSME and agriculture and employment oriented units which are already being established in semi urban areas and rural areas, etc. Provision of medium and long term finance. The commercial banks in developing economies invariably give loans and advances for the short term period. So they generally hesitate to extend the medium and long term loans for the business people. So this is the purpose joint stock bank established in order to provide the financial support for the long term loans and medium term loans for the business enterprises. Cheap money policy. The commercial banks in developing economies should follow cheap money policy to stimulate economic activities or to meet the threat of business like recession. In fact, cheap money policy is the only policy which can help to promote economic growth of developing economies by providing the finance for industrial enterprises. So therefore, cheap money policy is being followed by these joint stock banks. Need for sound banking system. A sound banking system is essential prerequisite for the economic development of developing countries. So therefore, these banks are providing the finance for the rural credit, short-term credit for the traders, foreign exchange business operations, etc. So this is the way how the joint stock banks are playing very important role in financing the development of business enterprises in the country. Now, let's understand the structure of banking system in the country. As we know that the apex institution for the entire banking system in the country is Reserve Bank of India. It is a central bank and it has a monetary authority in the country. So, all banks have been classified under scheduled banks and unscheduled banks. Under the scheduled banks, we have commercial banks. Under unscheduled banks, we have cooperative banks, state cooperative banks, central cooperative banks, primary credit societies. So these are the unscheduled banks. Under the scheduled banks, we have commercial banks. So there are three types of commercial banks which are operating in the country: public sector commercial banks, regional rural banks, and private sector commercial banks. Under the public sector, State Bank of India and its group and other nationalized banks. Under the private sector, we have Indian private sector banks and foreign private sector banks. So now let's understand this structure of Indian banking system in brief. RBI is the central bank of the country which controls monetary policy of the Indian rupee. It has commenced its business operation on 1st April 1935 during the British rule in accordance with the provisions of the Reserve Bank of India Act passed by the British Parliament. Reserve Bank of India Act of 1934. So this has started its operation, but it has been nationalized in the year 1949 after the independence. The central office of RBI was initially established in Calcutta, now it is Kolkata, but was permanently moved to Mumbai in 1937. The central office is where the governor sits and where the policies are formulated. Sir C.D. Deshmukh is the first governor of RBI. It has the four zonal offices at Chennai, Delhi, Kolkata, Mumbai, and 20 regional offices mostly located in the state capitals and 11 sub offices. At present, the bank is headed by the governor, and the post is currently held by economist Shaktikanta Das, who is the 25th governor. And there are four deputy governors, namely N.S. Vishwanathan, B.P. Kanungo, and M.K. Jain. M.K. Jain and Patra will be the fourth among the deputy governors. Central board structure of RBI. First, central board, Reserve Bank affairs are governed by a central board of directors. The board is appointed by the Government of India in keeping with the Reserve Bank of India Act. Its functions are general superintendence and giving the directions to the banking affairs to the RBI. Local boards consist of one each for the four regions of the country. In Mumbai, Calcutta, Chennai, and New Delhi, appointed the central government for a term of 4 years. So these local boards advises the central bank and local matters to represent territorial and economic interest of local cooperative and indigenous banks to perform such other functions as delegated by the central board from time to time. Financial supervision. The board was constituted in November 1994 as a committee of the Central Board of Directors of RBI. The primary objectives of the board for financial supervision is to undertake the consolidated supervision of the financial sector comprising the commercial banks, financial institutions, and even NBFCs. Legal framework. It is administered by RBI. Its main functions are monetary authority, regulating and supervising of the financial system, managing the foreign exchange, issuing of currency, and other developmental roles which are undertaken by the legal framework, legal authority. Training establishment. It has the 5 training establishments in 2, namely College of Agricultural Banking, Reserve Bank of India Staff College, or part of the Reserve Bank of India. Others are autonomous, such as National Institute for Bank Management, Indira Gandhi Institute for Development Research, and Institute for Development and Research in Banking Technology. So these are the autonomous institutions, and there are 2 training establishments working under RBI. One is College of Agricultural Banking and Reserve Bank of India Staff College. Subsidiary of RBI. Deposit Insurance and Credit Guarantee Corporation, established in the year 1978 for the purpose of providing insurance of deposits and guaranteeing the credit facilities. Bank for Agriculture and Rural Development, NABARD, is also set up. It is an apex body in the year 1982 for facilitating credit flow for the promotion and development of agriculture and cottage and small industries in the rural areas indirectly. National Housing Bank was also set up on 9th July 1988 under the National Housing Bank Act 1987. Bharatiya Reserve Bank Note Mudran Private Limited 1995 prints bank notes Indian rupees for Reserve Bank of India. It has two presses, minting centers in Mysore and Salboni in West Bengal. So now let's understand the scheduled and non-scheduled commercial banks. Scheduled commercial banks are those banks which have been included in the second schedule of the RBI Act of 1934. Banks not under this schedule are called non-scheduled banks. In other words, banks with a reserve capital of less than 5 lakh rupees qualify as non-scheduled banks. Unlike scheduled banks, these non-scheduled banks are not entitled to borrow from RBI. That is one difference. Only scheduled banks have the power to borrow the loans from RBI for normal banking purposes, except in emergency or abnormal circumstances. That means, in abnormal circumstances like now we are facing coronavirus spreading, under these conditions, under this situation, under these circumstances, even the non-scheduled banks are also could able to get the financial support from RBI. Coastal Local Area Bank, Vijayawada in AP. Capital Local Area Bank Limited in Punjab. Krishna Bhima Samruddhi Local Area Bank Limited in Telangana. Subhadra Local Area Bank Limited, that is there in Maharashtra. These are the examples for non-scheduled banks in our country. Scheduled banks are further internally classified into commercial banks and cooperative banks as we have seen in the chart. Commercial banks is a type of financial institution that provides the services such as accepting deposits from the public, making business loans, and offering basic investment products to the general public and to the business enterprises. Cooperative banks. The cooperative bank is a bank that holds deposits, makes loans, and provides other financial services to the cooperatives and member owned organization. That means cooperative banks which are run, organized by the members only. It works for the benefits for the members. So now let's understand the difference between commercial banks and cooperative banks. Registration. Commercial banks are required to be registered as per the Banking Regulation Act of 1949 with RBI. Cooperative banks which are required to register under the Cooperative Societies Act from the respective state governments. Functions. It accepts the deposit from the public for the purpose of lending industrial enterprises or commercial activities. Cooperative banks, they are also accepting the deposit from only the members, not from the public. Okay, the public for the purpose of providing loans to only farmers and small businessmen with a motto of service to those members. Capital. Huge capital are available for commercial banks, but cooperative banks have limited funds. Area of operation, so they are spread. Commercial banks spread across the country and some banks even operating in foreign land. But cooperative banks, the scope of cooperative bank is limited. It is restricted to the particular state. Nationalization. So now there are about 21 nationalized public sector banks operating in the country, but cooperative banks, so which have not been nationalized, merchant banking services, almost all commercial banks are being undertaken merchant banking activities. That means providing number of services to the businessmen. But cooperative banks do not undertake any merchant banking services. Mutual funds, at present, Canara Bank, Bank of India, State Bank of India do operate mutual funds, but cooperative banks, they are not eligible to undertake the mutual fund business. Main motive of the commercial banks is to earn profit, but cooperative banks main motto is not the profit. It serves the members and the society in the particular jurisdiction where it has been operating. Interest rate. Commercial banks provide less interest when compared to the cooperative banks. Even the cooperative banks provide the interest more than commercial banks. A little difference we find. It is not much difference. Okay, even the cooperative banks and commercial banks are providing the loans and advances at low rate of interest. A commercial bank is historically a bank dealing with commercial loans and investmental activities in the country. In the modern business, in the modern British usage, it is the same as investment bank. It is also providing for the finance for the business enterprises. A mutual fund is professionally managed investment schemes, usually run by an asset management company that brings together a group of people who could able to invest in mutual funds. In turn, those mutual funds are investing their money in stocks, bonds, and other securities. So let's discuss public sector banks. Public sector banks where majority of stake is held by the government. Public sector banks are those banks which are governed, which are administered by the government of India. As I told you, there are total 21 public sector banks operating in the country, including the State Bank of India Group. In 1969, Indira Gandhi headed the government, nationalized 4 major commercial banks, 14 major commercial banks. So these are the commercial banks which are mentioned in the bracket. Allahabad Bank, Bank of Baroda, Bank of India. These are the 14 commercial banks have been nationalized. Nationalization is nothing but taking over the banking operations, banking sector from private to public. In 1980, further 6 banks were nationalized, like Andhra Bank, Cooperative Bank, New Bank of India, Oriental Bank of Commerce, Punjab and Sindh Bank, Vijaya Bank. So now it is Bank of Baroda. So now Vijaya Bank is no more existence. Now it is merged into the Bank of Baroda. Industrial Development Bank of India is an Indian government owned financial service company, formerly known as Industrial Development Bank of India, headquartered in Mumbai, India. It was established in the year 1964 and nationalized in the year 2005. SBI mergers and consequences. State Bank of India, which is India's largest bank, merged with the 5 of its associate banks, State Bank of Bikaner and Jaipur. State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala and State Bank of Travancore, and Bharatiya Mahila Bank with itself. So this is the first ever large scale consolidation in the Indian banking industry. With the merger, the State Bank of India will enter the league of top 50 global banks with a balance sheet size of rupees 33 trillion. 278,000 employees are there in State Bank of India group. 420 million customers and more than 24,000 branches all over the country with 59,000 plus ATMs are there. So this is the biggest commercial bank in the country. Private sector banks. Private sector banks are those banks which have greater part of share and equity are not held by the government but held by the public, private shareholders. There are many Indian and foreign private banks which are being operated in the country. So now let's have examples of the private sector banks which are operating in the country. HDFC, ICICI Bank, Axis Bank, Kotak Mahindra Bank, Yes Bank, IDFC Bank, RBL Bank, Federal Bank, City Union Bank. So these are the major private sector banks which are operating in the country. So there are also several foreign banks which are being operated in the country in urban and metropolitan cities. Regional rural banks which are formed on October 1975 upon the recommendations of M. Narasimham working group during the tenure of Indira Gandhi's government. The main objective behind the formation of regional rural banks was to serve the large unserved population of the rural areas and promoting the financial inclusion for the rural sector. So they have been created with a view to serve the primarily rural areas of the country and basic banking system, the basic banking and financial services provided for the rural sector. However, RRBs may have branches set up for urban operations and their area of operation may include urban areas also. So now we have seen number of regional rural banks which are being operated even in the urban areas. Thank you. So in the next class we are going to learn the cooperative banks in detail. Thank you very much. Have a nice day.